Oh, good timing. What's going on? Your favorite high school production is here, and we're live. Dan Parker.
Money in the house.
D-Money, Dan Parker. Gonna break it down for you. What's the state of San Diego real estate? You won't believe me if I just told you. So I brought the receipts. Evidence. Irrefutable kind. And of course, it's always good to speak with my buddy Dan Parker. So are you living the best life or what, Dan? What's going on?
No, I have to tell you, I feel like I just got a glimpse of your radio days. That was fun. I like that intro. I think, and you can come on to like every single one of my lives, at least in the beginning, to give an awesome intro.
Just to set the stage.
Yeah. Live in a San Diego's wonderful, man. I mean, it's a little bit hot right now, but who are we to complain? Oh my gosh, it's in the 80s. Sure. Wow. It's truly unfortunate for us.
It's so hot though, Dan.
Oh,
and of course I asked that because Dan's brand is the best life and all that. Mm-hmm. But here, this is a great summary of the market right here. There's a couple things that I think we should point out just to kick things off, because I love when data comes out and people go, "Oh, that's bearish." I'm like, "Huh? Do you know how to read data? Do you understand what the data actually means?" On Wednesday, we got housing starts and we got building permits. And this is all, of course, new construction stuff. So, I don't take the data from new construction to heart too much because it's such a small piece of the market. But people are like, "Oh, housing starts lower than expected. Previous numbers 1.56 million, expectations 1.48, comes in at 1.43." And you kind of see the same thing across the building permits. People are like, "Oh, they're not building houses." It's like, yeah, that's actually part of the problem. That's the problem, meaning why prices are going so high and just out of control. Even though rates are up, prices won't stop. They just won't settle. We have a pullback. We'll show some macro data here in a second nationwide, but this is the problem, Dan, is that there aren't enough homes for sale. That is what is perpetuating the market. Even though rates are high, a lot of buyers have gone to the sidelines, and they'll come back when rates drop. But that coincided perfectly with this headline from today. June home sales. So June numbers in. Slowest pace in 14 years. What does slow pace mean? That means the volume of homes sold was almost 20% less compared to last year. Mm-hmm. So number of sales aren't taking place. There isn't a lot of volume. That is good for prices to go higher. That's good for people who own real estate. And just kind of shows you, look at this, slowest pace in 14 years, Dan.
Oh, there's so much we can pull. I have like so many things to pull apart on everything you're saying right now. And I love when we see these headlines because they're always very insightful. And you and I do lives with Burn all the time too. Like, and I'm just constantly looking for these things. I'm like, wait, what are they trying to say? They're obviously, they have one message, but the way that they're saying it is something that's completely different sometimes. So, I mean, if you look at what I've looked at a lot over the last couple of years, I've been having the YouTube channel and doing these analysis, is we've been a lot of times focusing on how much active inventory do we have? How many homes are currently for sale? The problem with that is it doesn't take into account how many homes are actually going on the market throughout the course of the month. Take out like how many are the problem is with active inventory, homes are being bought and sold every single day. But I want to, over the course of the month, how many homes are actually being sold? And so that number has actually, before this year and last year, basically stayed the same for the previous 10 years. The amount of homes currently on the market goes up and down, but that number has mostly stayed the same over the last 10 years. And then 2 years ago, it dropped by 25%. This year, dropped by another 25%. So we have basically 50% fewer homes being sold today than we were on average the 10 years, or 8 to 10 years before COVID.
Wow. That is a massive stat.
Yeah.
That is a massive stat. That is crazy, actually. That's truly crazy. But it makes sense, though. If you think about like just trying to justify, because a lot of people are like, well, how is the market still like this? Like people ask me all the time, how could it be this way? And when I tried to explain this to people before this happened, 5 years ago, like, hey, one day it's going to be like this. Yeah. Trust me, we'll get there. I didn't think we'd get there this fast, but we're on the path that I've been predicting for a long time. We're just on a very, very, very quick path to it. And to go back to the headlines, I know you do this, and I appreciate this. How is this framed? June home sales drop. So this is obviously written with a negative tone. June home sales drop. What does that mean? It makes it sound like prices are dropping, doesn't it? Home sales drop.
The
So
word drop
slowest
is
pace.
price drop. That's what we associate with 100%.
Right? That's what people will interpret this as. So if you wonder why buyers out there, a lot of people have a negative connotation, they don't even know. It's just subconscious because you get all these messages all the time framed in such a negative way. And people are doing this intentionally. Slowest pace in 14 years as short supply chokes the market. That does not sound good. That does not sound like good news.
It's not good. We'll give them that.
The market's getting choked.
Yeah.
And it's not great for buyers. It's really not. And so when I talk about like things being good for real estate, that means good for people who own real estate. That's what I mean. Like if I were to say, hey, this is good for Tesla, I'd be talking about people who own Tesla stock, not people who want to buy Tesla stock, right? And so this is good for sellers, good for real estate. When things are bad for real estate and therefore good for buyers, then I will just say this is good for buyers.
Yeah.
So it's either good for sellers or good for buyers. It's hard for it to necessarily be good for both, unless you just have a straight up market where sellers get paid to wait and buyers should get in whenever they can. We're not in that market right now, but we are in a market where there is just very little there. And we're going to look at some of those stats in a second. But I just wanted to point this out because of the fact that this is actually insanely bullish for real estate. This is what Lawrence Yun said, chief economist for the Association of Realtors, I believe, National Association of Realtors. There are simply not enough homes for sale. Yep. Thank you, Lawrence. I'm glad you got all those degrees to tell us that, because it is one of the most obvious things you'll ever see, especially with home sales down almost 19% year over year, slowest pace in 14 years. That doesn't mean that buyers don't want to buy. That means that there's not enough homes for sale. That's what it means. So know what is actually going on behind these things. Let's take a look. I want to show you this, Dan. I want to get your thoughts from a ground level, because I always like to look at Altos. I think if you're going to study a market and you're going to look at data, you have to look at the same data source, because as we've talked many times, they're all going to kind of be different. And so if you really want to make comparisons, you have to look at the same source. So I like Altos research. It gives me consistent information. Do you remember the last time we looked at this, what the sellers market action index was?
Well, I feel like it's hovered around where it's at right now for a long time, but it's been a little while.
It was way lower, bro. So like we never got to a buyer's market.
Yeah.
But we got down into the 40s. And if we look back, even just 3 months here, we were down in the low 60s. This thing is rebounding, and it's rebounding strongly. I mean, we're seeing the number of homes with, the median days on market is at 21. Price per square foot, which is my favorite metric. I mean, if we want to really judge a market, what's going on in a market, price per square foot is what you want to look at. There's the last 3 years.
It's so wild.
Look at that. This right here, this is where everybody was saying it's going to crash.
Yep.
Right? It's going to die. It's going to fall off a cliff. And what happened? The same thing that happened the last time that everybody and their brother said the market was going to crash, COVID. And a point that I've tried to make that I know is hard to understand is that if everyone is expecting a crash, the market cannot crash. A crash can only happen if the market as a whole thinks that it can't crash. That's what can cause a crash. If the market believes as a whole we're going to crash, then a crash is not possible, because people will not take those additional chances. They won't take that loan out against their retirement to go buy a house, and all those things that if you believe there was no chance for a crash, you would do. People won't do those things.
So are you saying like there needs to be an unknown catalyst that like nobody's paying attention to for the market to crash? Is that kind of what you're getting at?
Basically, yeah. A market can only crash, and this goes for any market. The market can only crash when it is, well, it's most likely, let's say this. I don't want to say so definitively 100%. It's most likely that a market can only crash or is more likely to crash when the market overall, the market participants do not believe that a crash is possible. And you can look at the tulips, you can look at, the big crypto crash that we had, that's, where Bitcoin peaked in 2021. A lot of people thought it was going to $1 million a coin and things like that. People didn't think there was any chance that it could crash at this point, right? And it definitely did. When you look at the housing crash that took place in 2008, there was 5 or 6 years of inflated values and prices continuing to go up, where people thought there was no chance that home values could go down. I mean, you have to understand the build up to that. When homes weren't selling back then, Dan, they would just increase the price. I remember watching homes that were listed for sale, and I would check back, certain buildings in downtown that I was looking at back then and stuff. I would check back, and a month later, the home would still be for sale. Instead of being listed for 600,000, now be listed for 610. They were increasing the prices when it wasn't selling. I mean, that's that's belief that the market can't crash, right? Like, hey, we're going up. Whether you like it or not, we're going up. Whether you want to buy it or not, we're going up. We don't see that kind of stuff happening at this juncture, and we haven't in this cycle. So, to me, this is the most important chart to look at and understand about if you want to know what's going on. And the most important concept, the most important thing that feeds this, is just simple lack of supply. And I don't know if you've seen the same thing I've seen. You get buyers who get excited about the market, and you think, okay, man, they're going to be writing offers for sure, left and right. And it takes them a while. It can take 2-3 weeks before they see something that they really want to go after. Is that what you're seeing?
Yeah, for sure. And one thing I want to bring up, because what I love about when we have these conversations is you really go into that macro level. You take a bird's eye approach of what's going on in the economy as a whole. And then we're also talking about San Diego stuff. So that first article, I believe, was it US? So June home sales drop in the US. The second, the Altos, that's going to be San Diego. Also, just pay attention when you're talking about San Diego. A lot of other things that we tend to bring up on our channel, maybe they're talking about San Diego County, but this is going to be specific to the city of San Diego. So those are going to have some variances there as well. But yeah, I mean, there's just so few homes for sale. We've been talking about this forever, and that is what it boils down to. And what we've seen, like, I had a client this morning who we sold her house at the end of last year. And at the beginning of this year, she's all cash buyer. This is going to be the last property that she purchases. And she just kept worrying that we'd find a house and like, well, I don't really want to pay that much because I think it's worth $10,000 less than that. Well, that's how this whole situation has gone since January, since I've been working with her. And the unfortunate truth is I had to have a heart-to-heart with her this morning. Like, look, I never want to push anyone in buying a house. I'm not that salesperson, right? Like, I want the best for you. Maybe the best for you is renting. But here's the challenge: is you're waiting for a $5,000 or $10,000 deal, and the market's gone up 12.5%. So for the homes that you're looking at, they're now $75,000 more expensive than they were at the beginning of the year, and that is not slowing down. I mean, it's not a good situation. So
it's tough for buyers. It is. Let's talk. I mean, let's talk about interest rates. Why not? Let's go on there. Where is my chart? Here it is. Let's see. Gosh, that's so small. So long story short, we had a big rally, after, we got through some good inflation reports back to back, some big candles here. You're seeing these mortgage bonds spike higher, which is what we want to see. We want to see mortgage bonds trade higher. That gives us lower interest rates. We got back into the three amigos here, the three moving averages, 25, 50, and 100-day moving averages. And we just resistance again. So every time we seem to be getting in here, we're rejecting, in here again, and now we're rejecting again. So we just can't get on the other side of this thing. It's what we really need to do is we need to reclaim higher ground here for mortgage bonds, and then maybe, come back and then have it as support. And that's when we'll really start to see things. Now, part of the reason why this is taking place, this looks too technically obvious. It's because the Federal Reserve is who's selling, right? They bought a ton of mortgage bonds at the top. Now they're selling at the bottom, which is very typical of them. It's incredibly stupid. They should not have been doing anything. They shouldn't have meddled in the bond market whatsoever, other than as to be a backstop. If the Federal Reserve wanted to be smart about this, what they would do is they'd say, when they were buying, they wouldn't have been buying at 105 and 106 and all those crazy prices for those 2% coupons that they did to get rates down into the 2%. what they would do is they would say, hey, we'll buy infinite amount at 100 strike price to just create a floor. Just create a floor. Don't think that, that you're going to be actually moving and market making in the bond market, but just put a floor and say, listen, we're not going to let it get below here. We're going to say that that's where we're going to draw a line. This is the worst that the rates are going to get in this time frame. And if the market takes it up from there, then so be it. And instead, what they're doing here is they're obviously selling. They're selling at these averages. They're consistently doing so, lightening the load from the bonds that they purchased, which is too much. And look, we know Goldman Sachs made a ton of money selling those bonds from the highs. So essentially, you have the Fed, buying these bonds from Goldman Sachs covering, and now, buying them back from the Fed at lower prices. I mean, it's part of the big Wall Street game that goes on. You can't really see the mortgage rates here. So let me just go ahead and tell you where we're at right now. These are the averages according to Mortgage News Daily. 7% for conventional.
On the nose.
Yeah, right on the nose. Rarely see that. That's a 30-year fixed. This is inclusive of points and everything. So the thing I like about these averages is not just the rate, it's inclusive of people who are paying points. And so you have to keep that in mind. Like, we do rate offerings with no points. So when we're beating these with no points, we're really winning there. 30. So FHA and VA are showing on here about 6.6. We're actually closer to like 6.125, 6.25 today, depending upon exactly where you lay, condo, detached, loan amount, credit score. We're right in that low sixes. So we're considerably lower there. On the jumbo side, there's definitely some 5/1 arms that are better than 6.95%, as it's showing here for jumbo. We got one locked recently, 6.225 on that. So I'm about 1/4 to 0.5% lower on these interest rates, but that's sort of where we stand. So we're for the most part, most people are seeing 6s or 7s when they're buying right now. That's what most people are seeing. No one's really seeing 5s unless they're buying it down or getting some sort of credit or doing a 2-1 buy down. So 6s and 7s is where we're at, which is, easily double where we were a year and a half ago. Well, let's take a look. I'm going to talk about macro. Let's take a look here. Now, I've already zoomed this in. We go back to 2000. That's what it looks like. This is the average sales price of houses that were sold in the United States. And the further you go left on this graph, the more obvious what's really taking place it becomes. Just the overall supply squeeze for homes with a growing population, and really just a growing household formation. A lot of people don't realize that too. They say, oh, well, population is flattening. People aren't having babies as much. True, but people also aren't communing together either. Everyone lives in their own house. Everyone wants to, do their own thing. If you talk to, 4, let's say business women in their 30s who weren't married, they're not living together. They each own a house, or at least live in their own household. And so household formation isn't totally dependent upon population growth like a lot of people believe it is. It's actually, it's not. And so you can still see a supply squeeze on the macro side for, housing inventory, even if we don't grow population, Dan. And this here, I did the math on this already for you. So if we pull this up, all right, we had the peak here. Where
does this go? Where does it end?
So this graph right here, it ends at the end of Q1. So we're waiting on the Q2 numbers, which should be any day now.
Yep.
I believe that actually it will be next Thursday is the day that the data will come out for Q2. But I expect it to be higher. I expect it to be higher than where we are here. So the average of 516, 500. The peak Q4, 552, 600. That's a 6.5% decline nationwide. So 6.5%, pretty, healthy pullback. But I do believe that we're going to see higher on the next dot. And so will we, then continue down lower? Will we see prices go to lower? I don't think that can happen without significant inventory. And I don't see where significant inventory is going to be coming from. It's not coming from the home builders.
Yeah. There's just not enough lined up. We talk about this a lot too. We're like, it's it takes a long time just to build one home. It takes multiple years to get all the permits and get everything started to build one home on raw land. It takes 8 to 10 years to build a development. If you were talking about 100 plus homes, and we don't see enough new development down the pipeline, we don't. So we're at best, we're 10 years out from getting new homes, and 10 years is going to be a long time, a long, tough road in this real estate market.
10 years is a long time, man. I had someone, this is funny. You'll appreciate this. And we are live. They live with cats. Okay. We are live. So if you want to drop a comment, feel free to do so. If you have questions, give us a holler. We'll hit you back. We'll say what's up. I had someone, you'll appreciate this, someone who said, hey, we're going to go rent a couple months ago. And they just came back to me today and said, hey, so renting a house turns out to be harder than because they had gotten in escrow, and then, it kind of fell apart. Things didn't happen the way they wanted to. And it's kind of like, you know what? Okay, I guess we need to walk away. We're going to go rent. They made that decision, and they have been unable to locate and secure a rental in the past 60 days. And now they're back in the market buying. So a lot of people think, well, it's easier to rent. So just go rent. It's not as easy as you think. Here in San Diego, I mean, I can't speak for other markets necessarily, but here is a tough rental market. Really tough. I mean, they're scrutinizing people, Dan, more than we are for homes. I mean,
lack of inventory is not just referring to homes for sale. It's homes for rent too. It's the same and sometimes worse challenges of trying to rent a property here in San Diego too. And rates have gone up so much, or prices have gone up so much. It's just making it really difficult.
So a couple things here. Price per square foot we can see on the rise. Median days on market relatively flat here. It's a little tick up in price decreases. Sellers getting a little wild there, wilding out. Inventory, a little slight tick up in inventory. Rent way higher than it was 30 days ago. Market action index very strong. So everything on that front looks super good. Here's one thing that is also impacting and will impact the market. I've noticed this just from an underwriting perspective, that we're seeing banks being a little bit more cautious, asking for a little bit more conditions, a little bit more rigor is happening on the underwriting side. There's some banks that got pinched a little bit on buybacks and
programs, right?
Insurances. What's that?
So especially in like the unique lending programs, right?
Oh, for sure. Yeah, for sure.
Yeah.
But what this is regarding here, this Bloomberg article, Wall Street banks, residential mortgages face U.S. mandates exceeding global standards. So they're basically, what's happening is they're creating a higher standard for a lot of the Wall Street banks that are doing residential mortgages are doing what you're talking about, which is non-QM stuff, bank statement loans, specialty type financing for residential home loans, primary residence purchases, and stuff like that. But this increased regulatory environment, the more strict stuff that's coming down, it really does fall on the banks pretty hard. We know that United Wholesale Mortgage, which is one of the biggest wholesale mortgage companies out there, lost $90 million last quarter. So people are wondering, like, why are their rates higher, this month? Well, just take a look at the quarterly report. It's all you got to do. So the tightening from a regulatory standpoint does roll downhill. It does. And so buyers now who are already faced with, double interest rates from 18 months ago, almost no homes for sale, still a competitive marketplace, a very competitive rental market. It's tough. It's a tough spot. The people who've bought their homes already, who are living in the house that they really enjoy, are just like thug life right now, right? I mean, it's just like, hey, sorry you guys have to deal with all that.
Yeah.
My goal is just to try to get people to that place. That's what I want.
Mm-hmm.
That's what I want for my clients. That's what I want for everyone, to get to that place where it's like, you know what? I don't have to worry about this market anymore. I don't have to think about it. Don't have to think about it. Don't have to worry about it. Don't need to mess with it. Just get my house in order, get it the way I want it to be, and I'm good. And I'm good. And hey, if I get in and my rate's 6.5% or 7%, I'll wait for Derrick to call me and tell me that it's time to refinance. And that's the thing. I think right now, if you look historically, Dan, I'll get you 2 cents. When interest rates go up, we see a pause in the acceleration of home values. That
Mhm.
is what this 6.5% looks like to me. I do believe we'll see a higher tick on this when we get the second quarter, the Q2 number, but we'll see. We'll see. I could be wrong, but I'm pretty sure that's going to be higher. It won't be higher than Q4, but it'll be higher than Q1 of this year. And so this
Now
looks
it
to me
would
like
be here
there's
in San
some pause.
Diego.
It sure would.
Yeah.
Yeah. Yeah. No, you're right. This is a nationwide number. So this could be different than what my feel for the market is. And that's why I
Yeah.
want to make sure be clear about that. But for San Diego, whatever pullback we saw from what I see, it's gone. What are you
Yeah.
seeing?
Yeah, I'm seeing the same thing. I mean, well, I guess two or one caveat to that. One is like we saw at the end of last year, things started slow, more homes started to hit the market. People were seeing rates go up and it was finally hitting them. But I think it was more than that. I think it was also just um it was fear mongering in the media. Like you couldn't turn on your computer or the news without someone talking about recession or housing market crash. And so the clients I was working with at that time, we were having a lot of real conversations about the data and all the reasoning behind what's happening, and everything makes sense. But at the same time, they're just getting hit left and right with all these kind of like scare tactic media campaigns. And so I think that had a really big effect on buyer demand. And there were a lot of people thinking, all right, well, let's wait this out to see home prices coming down. Now we know that's not happening. But what I am noticing, at least over the last couple of weeks, is we're starting to see some buyer fatigue. We're at that point in the
Mm,
summer where, a lot of this isn't like the time of year where a lot of people are starting their home search or like
true.
starting to ask about, like, they're either off on vacations. If they wanted to buy in the summer, like they've already started this process. And if they have already started this process, a lot of those people are just starting to get burnt out. And some of our clients are deciding, we're going to hold off on buying, or instead we work with a lot of relocations. Maybe instead of moving to San Diego, we're going to stay where we're at, or we're going to move to Florida. So I'm starting to see that a little bit. I don't think that's enough to really move the needle, but we still expect, nice home on the market. It's going to get multiple offers. It's going to be competitive. Some of the homes in the higher price points, like 1.5 million plus, you're starting to see a little bit of a slowdown and more days on market, but still
Mm-hmm.
anything up to $1 million or 1.5 million is still highly, highly competitive.
Mm-hmm. Especially if it's in that higher price point and it's a condo
Yeah.
that's not VA approved. That's rough right now.
Yeah.
You want a VA buyer in San Diego. If you have a $1.8 million condo, that's your best bet, because the financing is it's not pretty. It's
Yep.
not pretty for those jumbo condo rates. But yeah, you're 100% right. This time of the year, it's a different kind of year. You would think, oh, it's going to be banging in the summer. Not really.
Mhm.
People have a lot of things go on, and in the early parts, when school lets out, can be. We get closer and closer to starting school back up, and it does. There's like a lull there, like a vacation lull, that sort of takes place. But I've been seeing a lot of that too, where people are pre-approved with me. They're looking at the San Diego market, and then they're asking me, "Hey, are you licensed in Arizona? Are
Yeah.
you licensed in Texas?
Yeah.
Are you licensed in Florida?"
Yeah.
Those are
You
the
got
main.
one of those this week from one of our clients.
Yes, I did, in fact, like yesterday.
Yeah.
And so, but I have a buddy of mine who's buying a place, and he's buying a place from his dad. He has a 1-1 condo to sell, and his agent, who's also his buddy, was like, "Yeah, I don't know how long it's going to take. You might need to do like a 60-day lock. I mean, it's a 1-1. It's really small. It's here and there. And I mean, immediately put it on the market, and there's a gazillion people there,
Yeah.
and he's going to sell it super fast. So yeah, I think being realistic is always wise. Like, don't just assume if you're going to sell your place that it's going to go bananas immediately.
Yep.
Um, but if you have the right price in this market, especially at or near an entry level price point for whatever type of property you have, then I think you're going to see a tremendous amount of activity. I don't know, Dan, if you saw this or not, but I posted this. I can't remember if I posted this earlier today or late yesterday. But I did want to talk about this
Oh,
because I've been calling for a number of months now that, the whispers of this have been going on, and there's bipartisan support for this. So senators are introducing this bipartisan a ban on stock ownership for executive and legislative branch office holders and their families. Okay. So this obviously should be the case, right? We should not have, corruption in politics that involves, that's legal. I mean, literally members of Congress can do insider trading, which you and I can't do. They can legally do it right now, and a lot of them do. And they make a lot of money off the information they have from these different investigations and, approval of different things that are going on with different companies. And they
It's
want to ban
crazy.
that. It has bipartisan support. The last time we saw something like this was the Federal Reserve. The Fed governors got busted. A whole bunch of them were trading stocks. Asinine, just crazy. No one knew. No one
Yeah.
thought about it. It just didn't cross anyone's minds. Like, certainly, if you had asked anyone on the street, they'd be like, "Oh yeah, I'm sure they can't do that." They could, and they were, all of them. And so they banned that. That was the first top that we got, the first local top that we got in this downtrend that we're in. Well, I believe that when this goes through, will be a sign for the next local top in stock. So I do want to say that, my opinion, not financial advice. I haven't sold anything yet, but be on the lookout for this. Be on the lookout for this and talk to your financial advisor. Maybe it makes sense to shave off a little bit, maybe 10, 20%, buy at lower prices, but expect that to happen. That is definitely a catalyst for lower prices.
Hey, I got a question for you, Derek.
Yeah, for sure.
Something I saw the other day, and I haven't had a chance to really look into it thoroughly, but we're talking about needing more inventory here in San Diego specifically. We live here in San Diego, but just nationwide, we need more inventory. We need more homes for sale. And part of it is we need more people to sell their homes in order for more homes to be on the market. Now, of course, they're going to end up needing to buy somewhere else, but maybe they'll move to another state. Maybe they'll rent. I mean, there could be other options there. But something I saw was this idea of increasing the capital gains exemption from
Mhm.
$250,000 per person to $500,000 per person, so up to $1 million in capital gains that you don't have to worry about paying. Have you heard about this at all?
No, is this real, or is this just someone's idea?
That's the thing. I haven't really looked. I was hoping that you'd be the guy to know about this because it's a really interesting idea to think, if you have this major, major benefit, especially here in San Diego, where home values have gone up by over $500,000, and you have homeowners sitting in homes with $1 million+ in equity, and they're thinking, oh, I don't want to sell because I'm going to have to pay taxes on $500,000 of that. But now they have the opportunity to sell that home and not pay any taxes on the equity. It is going to have an effect of getting more homes onto the market. How many homes? I don't know, but it could be a very interesting.
It would be. Anything like that, any type of tax credit, any type of incentive to sell, to help people move their home would make sense,
Yeah.
and be very, very, very helpful. Instead, what's likely to happen is that the market will naturally get to that point once interest rates are probably in the fours.
Hmm.
When rates are starting with a four, that's probably when the people who have threes and twos, they just can't stomach the idea of a five. A six is
Yep.
preposterous, and a seven, they'll hang up on you.
Yep.
So, we're just not at that point where those people who have 2 and 3% are even in the conversation. Like, nope, can't can't do it. And
Hmm.
if they do talk to you about it, which I've talked to many people who have, I'm looking at their payments and like, man, I remember when payments were like that. You got a $3,100 payment on your house. That's not what it's going to be if we do this refinance. That's
Sure.
not what it's going to be if you sell and buy another one. I mean, you're looking at a significantly higher payment. And so that is 100% a huge piece of resistance that we're dealing with in this market. Now, when rates drop at some point, it'll really be a catalyst for the volume, for those people who've wanted to move, but it just hasn't made any sense.
Mhm.
They've been sitting on it a long time. They're got ants in their pants. We know that people on general don't stay in their homes for very long, 5 to 7 years. They're going to be ready to go. We're going to have a crazy boom, brother. I mean, it's going to be bananas. Now, will prices go up significantly at that time? Probably not a huge amount. When that's just going to be a huge boom of transactions, where you're going to see a lot of people come to the market who are sell buyers. And those are the people who were missing the most from this market, in my opinion, is the people who want to sell and buy. In fact, I talked to someone this morning, who owns a home in Hemet, spends every weekend here in San Diego. Hemet's like north of Temecula. Let's call it an hour and 15 minutes or something. And so north and away from the beach, come down here to the beach every weekend. Like, oh, we would like to move down there. Have 180,000 net potential from the sale of this home in Hemet, according to the realtor. And we're looking at it, and they're like, yeah, rates are just too high. I mean, so last night they're ready to go, ready to figure it out, see what the numbers look like. This morning, after sleeping on it, like, you know what, rates are just too high. We're going to hold off for a second, wait till rates get down a little bit. And it's just the perfect sentiment to understand why isn't there any inventory. Is that conversation I had with her this morning was just, you know what, I can't stomach it. I just can't take it. It's sacrilege for me to trade a 3.25% mortgage for a 6.5. It's double. It's just too much. I just can't do it. I can't wrap my head around it. I can't eat that. I can't swallow that pill. So that's the big issue. When rates come down, people like that will jump into action. Volume will go everywhere. Dan, you and I will be so busy, we won't be able to go to the bathroom. And that day's coming. So, I've been telling a lot of people in our business now, take your vacations while you can, because when we get on the other side of this thing, if we continue to see inflation reports like we did last week, if those keep coming in as bangers, the bond market won't hold. Doesn't matter what the Fed does. The bond market will explode. Rates will go down. That's just going to happen.
Yeah. And that's the trajectory we're on for inflation too. So it's going to happen.
Yeah. No question about it. So, all right. So stocks, let's see. There's one other one on here. Oh, this is interesting. 10 states. So it was the states in America, the strongest housing markets, offering buyers the best value. Hey, Dan, do you think San Diego and California are on here?
So wait, what's the 10 states strongest housing markets offering buyers the best? Oh yeah, we're definitely not on there. But hey, one thing I always like to mention, because we're always at the bottom of these lists, there are some really good incentives in California. Specifically, if you purchase a house, your property tax can only increase a very minimal amount every single year, it's not like that in other states. So I know people that moved to Arizona right at the beginning of COVID, their home value went up 50% in 18 months, and all of a sudden their property tax went up by 50%. You don't have to deal with that here. So you get a huge benefit from living in a home for a long period of time. If home prices continue to rise, you gain the equity, your property tax stays about the same. And then once you get to 55 plus, you can actually transfer that tax base to another property here in California. So we do have some kind of underground secrets, but it's more of like the long play here in California and in San Diego. But no, as far as affordability and making it easy for first-time buyers, we're at the bottom of that list.
Well, and I want to point out again the numbers on this thing. We can't sit here and argue and say, no, California is one of the more affordable. That's silly. Yep. But what we can do is we can look at the reality of how these numbers are calculated. So remember, when they're calculating median prices in some of these places, and I found this out on my own, looking at homes just out of curiosity that I would liked in different places like Minneapolis and, Columbus and where else did I look? Someplace in Tennessee. Maybe it was Chattanooga. I can't remember. I was just looking around some of those places. What you see in those markets, and even Missouri, market I'm very familiar with where I'm from, you have houses in some of these places that are 100,000 or 150,000 or 200,000. You could buy a house for that. It's not pretty, and I'm showing this picture on purpose because this is supposed to be Columbus, Ohio. So you have houses like this that might be 100 grand, 125 grand, and those show up and they play into the numbers. They play into the averages. They play into affordability. It plays in. If you're a first-time buyer who's not ready to buy yet, you can rent one of these houses for $800 a month or whatever.
Yeah.
But if you go and you look at a nice 4-bedroom, 3-bathroom house, okay, that has a yard or it's in a nice neighborhood or whatever, the prices aren't that much different than they are here. They're just not. Now, you might get a newer house. You might get a little more square footage. You might get a little bit bigger lot. There's other things there too. But if you look at the houses that you would be interested in living in Minneapolis, and then look at the houses that you would be interested in living in San Diego, there isn't a big enough delta there to make sense for me, for how beautiful and how amazing San Diego is. Still significantly undervalued. And that was my point to bringing this up, is like, yeah, we can talk about Ohio and how affordable it is to live there, or, New Jersey, however they get, Indiana. There's that. Yeah, you can buy a house like that for 200 grand. in Indiana with a small yard, and it's nice. Maybe somebody did it up or redid it a little. That's there. That exists, and that doesn't exist here.
Yeah.
It doesn't, unless you're buying a mobile home with a land lease of $2,000 a month.
Yep.
And so we don't have that here to help offset affordability, Dan. We just don't have it. There's no cheap homes. There's no place to go. There's no place to go and own like a cheap house.
Yeah.
We don't have starter homes. We have condos.
Mm-hmm.
That's what we've got.
We don't even
And
have a lot of townhomes. A lot of them are in very expensive areas. You're like, oh my God,
that's true.
crazy.
That's true. Yeah, even the townhomes and condos that we have, a lot of them have high HOAs or things like that because they have a lot of amenities, and the biggest amenity is the sunshine.
Mm-hmm.
So, when we look at numbers like this, when you look at articles like this, I want you not to take these things with just face value. Okay, look at it and go, well, how is it that Georgia is so much better? How is it that Ohio has so much better affordability? North Carolina, what's the other ones in here? Maine, South Carolina. What was number one? I can't remember. Florida. Think about those and go and look. I encourage you to go and research these areas, look at the houses, and you know what? You will see. Like if you look in Fresno and your budget's 400,000, you'll probably see a nice house that you won't see here. It won't be here. And you have to make that decision, about lifestyle and income opportunity and what you're going to do on the weekends, and if that's worth it. And whatever floats your boat, this San Diego floats my boat. That's all I know. So let's see. I got one more for us here, Dan. The soft landing. So
one of the biggest differences, I would say, is size of home for sure. I mean, we are definitely more expensive than other places. You bring up some very good points, but I get it a lot where I have either size of home or being in, quote unquote, like top ranked school district. Those are going to be the biggest factors of making the affordability just go out of control in San Diego.
Great point about the schools. Major selling point. And we have some incredible schools here. I mean, unbelievable. We've got some of the top 10 elementary schools in the nation here in San Diego. Yeah. Public schools. Schools. I'm not just talking about private schools. I'm talking about public schools. Yeah. And that in itself, there's a lot of value to a lot of different aspects of San Diego. We're obviously bulls on San Diego. This article I thought was interesting. I'm going to include this link in the description if you want to check it out. The odds of a U.S. recession.
I saw this earlier this week. I'm glad that I don't know if we're ending yet, but I'm glad that we're ending on this point because this is really interesting.
Yeah. I mean, if you just look, economist estimates and everything are kind of going, hey, looks, the recession, we had a technical recession, but it was very short-lived. And GDP has been positive, and now we're in a situation where it looks like, you can kind of almost take it off the table. And some people will be like, well, that should be a good thing. It is. I think so. But if you look at what the Fed's doing, it kind of gives them the slack to go ahead and keep raising rates, right? Because they're like, oh, well, look, we're not crashing the economy. And that's always the concern. When the Fed's raising rates, they're going to crash the economy. They've been raising rates steadily, and it hasn't crashed anything. That's how resilient the economy's been. That's how resilient the real estate market has been. And so it gives the Fed the latitude. A lot of people believe there's going to be one or two more hikes this year from the Fed, and maybe that'll be it, or maybe it won't be. They're trying to really curb inflation, and it appears to be working. I hope we get a couple more good inflation reports. That would be terrific. That would be the best thing. I'm so sorry, I've been ignoring comments. That would be the best thing for. It's been a while. It's been too long, Dan. I need to do more videos. I need to be on this. I'm trying to get after it because there's a lot to say. There's a lot to cover. The information that's out there, if you just read headlines, if you don't go to the second layer, if you don't have a discussion with someone about it, if you're just looking at it yourself quickly, you miss a lot of this stuff.
Yeah.
And I mean, it's mega bullish. Everything is just super, super mega bullish for real estate. I don't say the same for stocks. Remember, I'm a call like it is. I'm not just a perma bull. I will tell you what's what. I was telling people, what you said earlier when you were like, right around that time when, there was this attack on real estate. I believe it was almost a year ago or close to a year ago. Let's say maybe 8 months ago or something, 8 to 10 months ago. It was just a heavy, heavy attack. And what did that turn out to be? That turned out to be in the local range that we're in, that turned out to be the best time to buy.
Yeah.
The best time. Where there was more inventory than we have today, rates were actually about the same that they
You
are
get
today.
one buy downs left and right all day long and better
Yeah.
prices.
Yeah. People were getting credits. You remember
Mhm.
that? For like 2 months, sellers were open. They're like, yeah, sure. Seller credit. Cool. Hey, what do we need to do? Lower the price 10 grand, give you 10 grand. Cool. Let's go. It didn't last long.
Mhm.
I was preaching, we were screaming here. You and I were both,
Yep.
hey, this is opportunity. This is what it looks like. This is what you've been waiting for. And there's only so much we can do. There's only so much we can do. It's hard to understand the macro elements that are at place here. But I want to draw you back to one more thing. And you're right. We are going to end on this. This right here. The inventory issue. Housing starts. This was yesterday. Much lower than expected. Much lower. 50,000 less. 40,000 on the permits. That's a lot. Those are homes that we desperately need. And we'll take them. Even if it's top shelf inventory, even if it's the most expensive inventory out there in the form of new homes, as a nation, we are desperate for housing inventory.
Mhm.
Desperate. And that is the reason you could point to and say, this is it. You could say inflation too is why prices are going up, and it's hard to argue that. But the main thing here is inventory, and there just isn't much of it. And so and by the way, where are all my crash trolls at? Where y'all at? Are you still lurking? Are you still watching? But you're
They've
just
been
not
quiet
commenting
the last
anymore?
6 months, man.
What are you doing?
Been quiet.
I know you're
That's how
there.
you know the state of the economy and what's happening is when those quiets start to really get quiet.
Yeah, yeah, y'all real quiet now.
Mhm.
And I'm not an I told you so type guy, but I'm a victory lap type guy. And I will take my victory lap when it's due.
Mhm.
So for the trolls out there, the people who used to light me up with comments and tell me about this report and that report, or this other YouTuber who was saying all these things, I want you to look back at what I said. Look at my videos 8 months ago, 10 months ago. Look at their videos 10 months ago. See what we were saying and see who was right. And then you can decide for yourself. Mr. Dan, while I have you, any tips in this market for our poor buyers? Any tips for sellers? Let's finish with that.
For buyers or sellers or both?
Yeah, let's do both.
Okay. Advice for buyers right now. I mean, honestly, just knowing what's going on a week to week basis is extremely, extremely important because even just 2 or 3 weeks ago, I would advise my clients to write a different offer than I would today. I would have them stand their ground more today than I would just a couple of short weeks ago and get, I don't want to say a deal, but like a better deal than you would have gotten before. Knowing what you can ask for, knowing what is not as reasonable for a seller to ask for, knowing what's more negotiable. All these things are really important to know in this market. And so, I hate for it to be a pitch, but like I do a lot of transactions. I have a team of agents that do a lot of transactions. Make sure you at least find someone that is active in this market because with 30,000 real estate agents, only 2,500 homes for sale, it's absolutely pathetic how many agents are not doing all that. So that's a very big point. And then sellers knowing, again, kind of the opposite end of that coin, knowing what you can ask for. This is not the market where you can go and ask for 3 months of free rent back, remain in the property for 3 months. It's not going to happen. It maybe can happen, but you're going to get a significant discount on the purchase price. That's probably not going to make it worth it for you to ask for something like that. So yeah, just knowing the specifics about what's happening right now today, what price point you're in, and really being strategic in this market is really crucial.
Awesome. And I'm going to put Dan's contact information as well down in the description. You can reach out to him if you have questions about real estate, interested in looking at real estate, relocating to San Diego. He's a great resource, a great team that I highly respect. And I'll throw this in there too for buyers is, really, really inquire. Your agent should do this, okay? But a lot of times they don't. Really inquire about what is it that the seller wants. What would be like perfect for them,
Yeah.
and it's not always price. It's not. Sometimes it is. We have you have sellers who are like, hey, they just remodeled and now they have to relocate and they really need this number, or they're upside down, or something like that. Sometimes it is just a number, but it's good to know that, right? If that's all it is that matters to them. It might be that, hey, they really, like a flexible closing date, or they really like to rent back the property for 30 days because they're really stressed at night about how they're going to pull off, moving out of here and selling this transaction and then buying the next one and all that. Maybe that's really stressing them. And so if you can give them a 30-day rent back or something like that,
How
then
about this, Derek?
maybe, yeah.
Sorry, I didn't know you were still going with that, but I've
Yeah.
had someone say that they were stressed about their move. They're moving cross country. It's an older couple, not like very old, but like an older couple. And they were stressed about the move and they were stressed about having to pack everything up and move. So literally what won us the offer was writing in that they did not have to clean the property before leaving. Now, these people were meticulous. So we knew that it was not going to be super messy, but hey, if you need to leave stuff behind, whatever you need, we'll take care of it. So yes, extremely, extremely important just to ask those questions and find out what they need.
Brother, I have a button for you. I haven't been on my button game for this segment, but that's what I'm talking about. It's all about meeting in the middle, what works for everybody. Like if you are flexible on like, hey, we'll hire a cleaning crew, cool.
Yeah.
Or like whatever, we'll go in and clean ourselves. That's something where you can really stand out. No other offers were saying that. I guarantee it. And so now you're really sticking out. Hey, these people are trying to make it easy on us. Like just by the nature of humanity is that people want to repay favors. And so that's genius. And that's what I mean. Like that for me is probably a buyer tip like all the time. But I think particularly in this market where some properties, they're getting lots of offers. And some of those offers may seem too good to be true. So they just kind of skip over those, or, there's some lowball people who are offering way under list still and stuff like that going on. So if you're in that consideration range, doing something to stick out could be huge.
Yeah.
And from a seller tip standpoint, I think just understand what buyers are going through and really listen to your agent about pricing. You are still much better off, pricing your home in some of those lower thresholds. If you want 825, pricing at 799 is better. That kind of thing.
That's
just to create that momentum, right? And to create that demand, no matter what market we're in. If you're selling a home in San Diego's still San Diego, unless that changes, unless we Chernobyl or something. Like as long as the beach is still there and the mountains are only a couple hours away and all that, as long as that doesn't change, you can make a seller's market out of your home sale. 100% guarantee, no matter what's going on. And so, ask your agent that question when you're interviewing. How are you going to make it a seller's market for me? And look for the best answer there. And that should include a lot of listening to what it is that you want to do. A lot of the things that matter to you. Are they paying attention to that? Are they taking notes of that? And then also be reasonable. Be reasonable as the seller. Even if you're in a multiple offer situation, be reasonable. If you want to say, hey, we want you to waive everything. Okay. Is that reasonable? I mean, not really, but can you get away with it in some cases? Perhaps you can.
Push people away. I've seen
it pushes
that.
people. It does push buyers away. It really does. I mean, you're going to get your best buyer. If you really need to sell fast, you're looking for your most committed buyer. And make sure your agent communicates that. Hey, my seller is looking, when they talk to the buyer's agents, my seller is looking for the most committed buyer. That's a clue. Ding, red flags go up. I mean, it's like, hey, opportunity, committed. What do we need to do? Hey, let's go hard deposit after our inspection. Or, let's write something that shows that we're committed if that's what they want. Communicate that if you're on the sell side, and you'll find your better buyers there. Dan, good to see you, brother.
And real appreciate you.
Yeah, man. It's great to have you on. I'm going to be more consistent. I'm trying to be more like you. And you know what? I'll tell you this. Your consistency on social media and through video production isn't just good for consumers too. I recently had someone reach out to me and they didn't have an agent, and you were top of mind for me too. You know what I mean? You're top of mind. You're right there. I put you on the list and they decided to go with you. I wonder if your library, your extensive library of content had anything to do with that. So you keep doing you. I'll keep trying to do my best to ride your coattails and tag along. And if you ever need anything, brother, I appreciate you guys. Thanks
All
for
right.
tuning in.
Appreciate you, Derrick. Be money.
Links are in the description. And as well as Dan and myself's contact information, want to reach out. Everybody have a great day, and we'll see you soon. Take care. Oops. I got to end the broadcast first. One-man production crew.